real quick because I know we do some analysis of the S&P quite often, and I see that you got a trigger on your indicator, which has is giving us a buy signal, but this is almost uncharted territory. So how do you even analyze where the ceiling is?
Okay, so let's talk about these technicals for a second here. So, first of all, we know that we identified a rally. And when we look at the broad market, we can, we have the past to really help us figure things out. So, when we look in the last 6 months, for instance, we know that we actually started an uptrend back on October 11th, right? That's the date that we identified the beginning of our latest uptrend. We had a little bit of a pullback, and then we really took off on this rally, a rally that went maybe a little bit too far. And then we pulled back a little bit just in the beginning of, January. We pulled back. We didn't actually pull back as much as we wanted to, right? If we had a pull back into this zone that you see I'm circling right now, this magenta zone, we would have said to ourselves, "Hey man, this is a solid uptrend that has enough distribution to really kick it into the next high gear." But so we go with what we're dealt. And so now you take a look at just this latest move. We had that kind of anemic pullback, but now again, we've really surpassed with the uptrend anything we can expect. This is good swing trading territory. So if there's swing traders out there, I bet you've been getting signals left and right because this has been kind of, you've got enough trend, you get these little tiny pullbacks, and then you get these swings up. And that just seems to be where we're going, Sip. I mean, we broke through 4,800. We're up at 4,900. We're in our green zone. And so the last thing I'll say is this uptrend has matured for us. It's tested lines of support, it's tested lines of resistance. It's now what we call a mature one, but it's not, and I want to clarify this because this is also adding to a little bit of my anxiety. It's not an ideal uptrend. And let me just explain that a little bit. I'm going to go back to my 6 month chart here to help understand what that means. So, because we're not getting these ideal moves against the trend, they're anemic. You'll notice if I draw in some lines here from support, yes, it's tested support, right? And it's tested resistance, but you'll notice that I'm forming a cone instead of a channel, right? We call this a consolidation pattern or a converging pattern. And so this is from a technical perspective adding to my anxiety because when you have these cone patterns, these converging and consolidation patterns, they tend to land on a pivot point and then do a further break, either up or down. We can never really tell. But what we do know is that the trend, as usual, is not going to continue. When you get to one of these cone points, it tends to either really move aggressively up or even pull back and move aggressively down. So I'm watching this cone and I'm trying to extrapolate, like if I were to draw some lines here using the actual charting software, we can almost extrapolate to the day. This is a technique that a lot of traders use, right? We can almost extrapolate to the day. If I continue out, and then on that day that we get to in the future, February 5th, February 6th, whatever it might be, we could start to look in the news headlines because it's just uncanny when you do this technical analysis like this. See, it's coming up. It'll be like in the next week or two that this point gets hit. We start to look in the schedule to see if there might be a catalyst scheduled on the news headlines that would cause when we get to that point for investors to start buying or selling. So this is set to happen. Probably we'll be talking about this next Friday, if not the following Friday, because I guarantee that these patterns, don't ever fail us. So